Okay, hello guys. We should be on live from the 5ers Trading Room. So hi everyone. Hi Paul. Yeah, interesting week also. We have only interesting weeks from already several months. And yeah, we're gonna talk about gold and Australian dollar as well. But the dollar in general, we're gonna talk about it as it's flying. We have a lot of banks, investors, hedge funds running to the dollar for hedge themselves, and we'll explain why. Also, I think we got several reasons to explain why the dollar is quite so strong recently. We talked about it several sessions before, but again, we will emphasize the reasons of why the dollar is so strong recently. Good evening, Paul. For me, it's good afternoon, but we have traders from all over the world, so I believe you're from the Oceanian continent if you tell me good evening. But yet, for me, it's good afternoon. It's 4 p.m. right now in my time zone. Hi, Lucian. Happy to see you. Yeah, let's wait a few more minutes before we start discussing about the market. Let me know if the sound is good. I tried to change something, but I believe we are all set up. Thailand, okay, interesting. Yeah, so I believe it should be maybe 8 p.m. in your time zone. That's interesting. Around that. Good afternoon from South Africa. Okay. Okay. Meanwhile, I'm loading the chart of the dollar index. We're gonna see it in the next few minutes. Okay, here we are in the daily chart of the XY, which is the dollar index. I definitely believe that we could, talking about volatility, at some point you want the price to get back to the average. I'll a lot of time explain it. We have actually this line which is around the average, around 1 year, and you see the price is flying. There was at least no retracement. We had one retracement in this zone. You see we had here rejections, but create a support and then the price fly. It's around 6% from maybe 3% from the bottom here to the top. For a currency, it's a huge movement. Okay, when you have the volume of the candle here is so high. When we go back, for example, to when we had less volatility in the Forex market, for example, you see here there is no big huge candle. Okay, but when you go here, okay, you understand that the market is highly volatile, especially on the dollar index. In the long term, I always wanted to find buying opportunity in the dollar index, especially the dollar pairs and especially the European currency versus the dollar index, and we will explain why actually the dollar is flying and gaining a lot of value. First of all, in the United States, they tried and started to fight inflation by increasing the interest rate. Okay, so definitely it's actually pushed the price of dollar, let's say the value of the dollar increasing. Okay, because it will be much difficult to borrow dollar, and then you should, you know, according to the interest rate, you should pay the ones who borrow the money for you an interest rate. Okay, so they want to fight inflation by doing this. And if you see the euro dollar, for example, or the pound dollar in Europe and in the BCE, the central bank, the European central banks, they didn't start actually to hike interest rate. Okay, they have a lot of debt. Their we say that GPA. I have the name in French, but I don't remember how we say that in English. It's not GPA. It's never mind. GDP, sorry, GDP. The GDP is going down. They have a lot of debt. Inflation is rising at a rate of around 8% in Europe, in France especially, and I think the same in UK. So inflation, they generally have to, you know, stop inflation around 2%. So that's the role of the central banks to fight inflation when the rate of inflation goes above 2%. Actually, we stand at 8%, and they didn't hike interest rate. They say, okay, everything will be, you know, I think we continue to print money, to print cash, and we don't want to hike interest rate. I don't know what there is behind this strategy, but this is why actually the euro dollar, yeah, GDP, Paul, exactly. But if we go to the euro dollar, okay, you see that actually the dollar is close to parity, to 100, and it's because the Europe don't want to fight inflation like the US did. Okay, US already increased interest rate, and Europe did nothing. So of course that the currency, the European currency is shooting down. So this is the macro environment view we have between the dollar currency and the euro, especially. We have also the pound. Okay, so this is the weekly chart in the euro dollar, and if we go to the pound dollar, if we go to the weekly chart, okay, it's the same. Okay, it's quite the same. We are actually reaching a demand in the weekly chart, but you know the sentiment is still very bearish. Okay, yeah, actually this is an interesting zone we have actually of the pound dollar, but euro dollar have already break the main support that we had. Okay, the main support was here. Okay, we have a short bounce here, but not enough. Okay, the central banks didn't react, and the market is getting down from here. So from a volatility view, when you have a huge dip like that, okay, at some point you expect the market to slow down. Okay, like we have here in this spike. Okay, you had a consolidation. It was a huge movement. Okay, the price slowed down, and we go down, and it's quite the same also here. Okay, the market dropped, consolidation zone basis, and then we rally. At some point, okay, the euro will have, okay, to hike interest rate. We don't know the timing, okay, because it depends of the central banks. It depends of a lot of things. But technically, you see here there is a liquidity gap. There is like no support when you can have in the past. Okay, it's the monthly chart already. It's 2000. It will go back at the lowest level. Okay, we are very close to parity. You see, we are 50 pips from touching 1.00. Yeah, so we had on a 15 minutes here, you see a demand, didn't respect. Okay, the trend is very bearish. You don't want to throw yourself in a buy actually in this moment. Definitely, I had a buy position, especially at that place, to have a small reaction. But you see, the market is not enough. My stop loss was very tight. So you should also be very careful as a trader to play stop loss, reduce your lot size in the market. But for people that found sell position, when we had this spike here, and we had some traders that play this very, very beautiful. They sell it here, they buy, the market get down, they sell it here again, and they are here in a huge short position. So yeah, definitely this is the move to have for last weeks, and I hope that it would be the same for the next weeks, as I don't see the dollar getting down, as long as the central ECB, the European Central Banks, will make a move. Maybe we can find some news regarding that, but okay, so they want to hike interest rate in September. Okay, so actually the world is burning of inflation, but they want to say, okay, we're gonna see it in September if we're gonna hike. That's what I'm reading on internet right now. Yeah, that's that's a downturn in the economy worldwide. Reaching again close to the parity in the euro dollar for people that born after 2000. Okay, you see, having the euro dollar close to 1 is one time. Talking about the oil, that also we expect oil to today the oil is spiking. Let's go to the daily chart. Okay, this is oil. We touch again the 96 level. You see, there is a strong demand in oil. Russia and Ukraine are still in war, so Russia have less exportation, and again, because of the COVID and because we had a lot of industry closed during that time, there is a lack of supply. Okay, I don't see any other reasons why actually the oil is still supporting this level. There is a big lack of supply. Biden, the president of US, Joe Biden, is actually flying into Middle East, into Saudi Arabia, to talk about increase the production in order to reduce the pressure there is on the oil market. But I don't feel this is enough. Okay, I don't feel this is enough, and Russia is also starting to close gas tunnel into Europe. So again, the commodity, the energy commodity, is still on danger. Okay, I also read that JP Morgan, for example, expecting the price of oil to reach $380. Okay, so if you go to the monthly chart, this is the top of oil was 150 during the embargo in 2008, and yes, 350 is 380 is around here. So expect that. I cannot believe this, but if JP Morgan tell actually that, there is some analysis behind that, and but I don't think that political and the country will let the oil price reaching this level. This will not be sustainable for all the country to have oil at that price. And yes, if we go again to the wheat and to all the agricultural commodity that we explained last week, this is also interesting. Yeah, there is huge volatility again. in wheat, for example. If I go to the monthly chart again, no, I will go to ZW. Okay, so the market of wheat stopped at the at the 2008 resistance. So there is the pressure in the agricultural commodity still get down. But again, you see, we opened in a gap up earlier today. There is a huge uptrend in the weekly chart. There is still a lot of problem in the commodity sectors, and this will impact the indices and the currencies especially. But this was quite interesting. This double top here went down, and it's also the same for gold. Gold actually crashed down from here. We had here a double top. Okay, this was around 2050, and today we stand at 1,736, and this is very surprised me. I always have my mind to macro and economy and risk on, risk off, and country and geopolitical. And when you have a high inflation in all country, people want to hedge themselves in one market, and this is not what we see in gold. Generally, when there is a huge inflation rate, historically we see gold pushing up, and same for silver. So in a 5 years or 10 years time scale, of course the commodity like gold and metals will continue to rise, but also crypto is another subject. But I don't see gold standing here for a long time. Okay, we can still there is still a strong support zone at that place. If we break it below, it will be around 1,500 at especially the bottom of the COVID, and then there is no, it will be so a cheap price that people want to go in. So yes, gold is interesting as well. What we have in H1, a lot of structure you see in gold, especially we have this market structure here that break down. Today we have a longer zone, which is that. But there is some place to go in the. There is some place to go lower. Okay, we have a demand here. That's probably why the market actually stopped. But we have this huge dip here that the market can go. But yeah, this is not bad at all to expect a short bounce up from here in gold. Yeah, Paul, I agree with you. Saying that oil can go to $380, and I will maybe show you the article. A lot of analysts are talking about that. Okay, in Bloomberg, JP Morgan sees stratospheric 380 or on worst case Russian cut. Okay, so they said if Russia is cutting the exportation, because Russia is a big producer of oil, we will see oil touching 380. I'm not the guy that can say, okay, they are wrong, but they have a lot of analysts. But again, 380. JP Morgan also said that Bitcoin will reach 100K in Bitcoin. Okay, they actually Bitcoin is 20K. So again, it's if Russia cut, worst case scenario, if Russia cut the oil, so we will reach to it. So if there is a lot of if in this type of articles, so we should be careful, and it will not be sustainable to have oil at that price. I don't think there will be buyers actually when oil will reach $200. Okay, there is alternative energy like we have wind energy. Some countries are self-dependent of their oil. Okay, we know that US already have a lot of reserves. So yeah, this is very worst case scenario. The worst case scenario for them is the Russian cutting exportation. And I think there is very few percentage that this can happen as well. So this is a geopolitical economy, but oil is always something that very fascinating me. I traded oil in options in a fund, and this was during the COVID. This was during very moment like that, and we should analyze and understand from our side where oil can go from a sustainable. It's the same when oil touch $0 per barrel. You can tell to yourself, how come a country cannot use oil in the future? Okay, we still use cars, we still use planes, we are still producing plastics. Okay, and oil was still at zero. Okay, so here was the opportunity. Yeah, let me read some questions meanwhile, and before moving to technical analysis, this was a shortcut talking about geopolitical and commodity, which is actually the key let's say the key subject that we should understand. Okay, yeah, that's interesting, and having the commodity stocks ratio is something very important. I had a chart that I analyzed a lot of time, because we are talking about gold and oil. So we have Bob and Paul discussing together that probably we're going to see a bear market in commodity. Actually, we cannot define that this is the beginning, because okay, if I go to this chart, no, this is not fat finger on my side. Again. Okay, this is the commodity index, okay, from the bottom of oil until today. Okay, so the market is only reacting to a huge rally at this time. So we cannot say at this time that we are in a bear market. In energy, of course not, because the price of oil is still very high. But in gold or in agricultural, okay, even we see wheat dropping down from the high, 20% down. I think maybe more than that, around 30% down on the agricultural commodity. We cannot say that it's the beginning of a bear market. Maybe we will switch from a bullish market to a neutral, but we cannot say actually that we are in a bearish market in commodity. On my side, okay, this is what I think. But yeah, this is a chart I wanted to show. Commodity stocks ratio. Okay, this chart for me was we had a lot of analysts talking about these charts. Okay, maybe on Twitter. Yeah, it's all the same chart. Okay, we will see here. It's the ratio between the commodity index and the indices. Okay, when the market when oil was at 0 and the S&P was, let's say maybe this chart is also good on in Bloomberg, I think. Okay, so here what's the stock bubble. Let's say I will start with the more recent case. Okay, we are in 2000. The commodity is at the bottom of its history. Okay, here it was the tech burst, and here it was the nifty 50 stock bubble. Okay, I don't know what is D7, but I believe that commodity was very low. Here, okay, when oil was still close to $10, $20 per barrel, we see the S&P rally, we see all the indices rally, and all the commodity, okay, it was gold, it was silver, it was agricultural commodity. The market was undervalued in opposite to stocks. Okay, actually we are not here anymore. Okay, the market we see on this chart, okay, we see that the market, so analysts said that here at this point especially commodity was undervalued, okay, against stocks. Today you see the market on commodity flight, and I believe that we should be here at the median. The median is around 4. Okay, so we came back to the mean in this commodity to equities ratio. If we have, a black swan event when JP Morgan can expect that Russia will cut their exportation, okay, so we can reach to this type of peak. Okay, the peak oil in 2008, the Gulf War. If oil is reaching $380, I will say my house, I will say, okay, this cannot be sustainable in the market, and I should be waiting for this black swan event. There is few chances that the market reach this peak, but again, if it reach this peak, so this would be meaning a huge sell in commodity and buying indices. So yeah, let's move back to indices. We didn't talk about indices. Yeah, we're gonna exit to CFD cash. Yeah, so on indices, the market already priced inflation, they already priced the hiking interest rate, and at some point we can switch from a bearish momentum. We already down 30% from the high, okay, in S&P and in Nasdaq, it's already 30%. So we are in a bear market already, but we can switch from a bearish market into a neutral market, and I will explain why technically and why fundamentally. Let's start at the fundamental way. We see that in commodity, and generally I like to make the ratio between commodity and stocks, especially in this market structure. Okay, we see already food commodities like wheat, soybeans, corn, okay, getting down from the high. Okay, if I show you again, I showed you wheat, maybe I can show you corn, for example. Okay, this was corn. Okay, the market is still bullish, but we made the top in corn. I think we made the top in soybeans as well. It's quite the same, and wheat I already showed you the chart. Okay, and this was actually wheat. So commodity already priced inflation, and we get back to the mean in terms of pricing. Okay, if we go back to the S&P, this is what I see technically. Okay, this might be even more clear for me. Okay. The market is like that, okay? We are still in a bearish momentum. We make lower high. We see this very clearly. Okay, the next huge support is at the top of the COVID. It's around 3,500. If I go to the weekly chart, this is especially this zone. You see it's the top of the COVID. We smashed down at the consolidation zone with the demand here. So the huge support would be around that space, and it would be around 40% from the high. Okay, generally when you have a huge drawdown in indices, 40%, 50%, and especially I believe that the American economy with all technologies is still the strongest one in the world. Here there would be investors from my age. Okay, I'm still young. I want to invest in the future, so we're gonna see some people investing in indices. But again, the market should go down until that space. Okay. If we go to the lower time frame, okay, the market is actually, struggling in that supply. You see, you remember we had a gap down. You see the market gonna have a retest, especially at that zone, and we might, reach this trend line that we have. What I expect in the next weeks is that all the indices will probably switch from a bearish momentum. Actually, we are in a strong bearish momentum to a neutral. Okay, so I probably expect the market, to break that area, and if we break it, that's a good signal. Okay, and then the market, we start to make some movement like that. Okay, ups and down. I don't see, with the economy we have and all the macro environment, I don't see the S&P in the next year making a new high. Okay, I cannot believe that. But what we will see is changing the structure from a bearish momentum to a neutral. Okay, it's the same of market structure. It's the same like having in gold, for example, what we have today in gold. Yeah, this is not good. This is not strong enough. But you see, I expect to have a structure like that in the indices, as long as the pressure in the world economy is still present. But having the good timing for putting your head in indices, it should be very soon. Okay, it should be very soon, switching from a bearish momentum to a neutral. That's actually what I think in the indices. Let me guys check you something. Okay. Okay, so we are still good to go. Yeah, maybe I should show you my chart here. So let's come back to technical and day trading. It was a huge shortcut to understand the macro environment. It's very important, especially during this time, to understand what's happening. Okay, you cannot trade gold without knowing what's happening. Gold is not only a chart. Gold is a physical commodity, and you should understand what there is behind that. So I know already that Bob, Charles, Paul, and a lot of traders in the chat already know the basics. So that's good to have you in the trading room, guys. So yeah, you see, in a day trading scenario, this was for me the support, the key zone in gold. I know that this is still a market structure, like we explained just before in trading view. Okay, we can have again the same scenario, accumulation, a boom, get down. It can be the same here. It's still a bit longer, but you know, my TP is not so far. You see, I'm not expecting a huge rally, but again, I want to expect the price to still reacting in this zone, and you know, I would be closing at the top or even maybe before. And yeah, the market is starting to push. Why do we pay 50% on every level in instant fundings? You know, we have a model, we have a growth plan, that's and we are actually one of the only in the industry to do that. Okay, when you reach 10%. You double your account. Okay, so you go from a 80k to 160k to a 320k, and you can reach 4 million. You know, so at some point we also want to profit with the traders. We should also cover on our side, like explained Paul. Yeah, that's the main reason. Risk management. When you have the growth chain and the growth plan, we cannot offer more than 50%. Okay, at some point we're gonna it will be very difficult to cover the business. So this is for gold. We're gonna continue monitoring this, especially you know, I can still exit some of my position at the median. That's probably what I will do. I see the market is a bit pushing here. So that's what I will do. And GBP CAD. Yeah, again we have my MT5 is lagging, so let me just refresh MT5. Okay, never mind. We're gonna go to trading view meanwhile. Yeah, this is quite interesting on pound CAD. If you go to the monthly chart, I believe that you see you have this zone that is actually a strong zone. The pound is weak, and the CAD And the CAD is also starting to gain some value, but if we go, and this mainly because of oil, okay? CAD is negatively correlated to oil. From a daily time frame, there is still no signal, okay? There is no signal in the daily chart. You see, you are in the middle of the range. We are in a demand today, but there is high chance that we break this zone, okay? Yeah, in terms of risk reward, this can be very interesting to make a buy. Even this is not the best spot, okay? On a risk reward, it might be an interesting trade. Okay, it might be an interesting trade in the pound CAD. Maybe the chart here is loading. Yeah, okay, so we load it in here. Okay, so in the pound CAD, you have this zone in H1. We had a huge volatility movement at the extreme point on polygon band. So you know that's something you can do. Putting the stop loss here and having the stop loss here again, it would be above 1 to 2, 1 to 3 risk reward. So yeah, that's a good setup. Again, like always, small reminder: all the analysis and the advice I'm giving is only from my perspective. Trading is at your own risk. So guys, make sure you understand the rules in trading and managing your investment. Yeah, that's not so bad. That's not a hyper signal because the market is very bearish in pound CAD. You see there is like at least no bounce in the daily chart. But you know, if you're like a very aggressive trader, this is the type of trade you can be looking for. Yeah, the pound dollar is actually smashing down. Again, the dollar is strong and yeah, in the euro dollar we are very close of yeah, this is quite amazing. 1.005, we are only 50 pips. Yeah, 50 pips from the parity. Raja, yeah, in bootcamp in the higher levels we offer 80% and in the instant 50%. Again, the bootcamp, you are not doubling your account at each stage, okay? You start from 100k and then you go to 125, okay? In the instant funding you go from 80 to 160k, okay? So again, this is only about risk. We might be looking by increasing profit share if we have a model in risk that give us the possibility. So you know, this is the reason. Yeah, let's move to New Zealand CAD and Aussie CAD. Like, you know, we had opening trade last week. This actually turned well on our side. I think it was a New Zealand CAD we had here identified a short. Especially at the top, I think it was on M30 or H1. Yeah, I think it was, you know, at this top. Okay, we were looking at a short, especially at that place. And yeah, the market, you know, I think we entered at this spot clearly when the market, you know, make a retest, the third retest, and then the market get done. I didn't wait until this demand. I think I closed some of my position into the, you know, this consolidation zone. Today the scenario is different. Okay, it's the same in the pound CAD. The market on lower time frame is on a huge demand. But when you go to daily, you see the market is on a big bearish momentum. Okay, so it's not the A+ signal. Here the short was very good because the daily is very clearly in terms of signal. But on the H4, you know, having a bar here again, it's not the best signal you can have. If you're an aggressive trader, maybe it might be a spot for you. I'm an aggressive trader, so this can be a spot for me, definitely. But you know, I already have a position in gold right now. And what about Aussie CAD? Aussie CAD. Yeah, it's quite the same. You see, we also identify this zone, especially on Aussie CAD. The market had a huge zone. We test one time, second time, we break out, we make multiple retests. Okay, and yeah, this was, you know, again, classic plays to have, you know, when you have this cycle, you see, this and this, you see, it's a lack of cycle. And here it's quite the same. Okay, like we tapped, market consolidate, especially at the top, and then the market get down earlier. Yeah, and I think on the H1 we had probably this this type of trend. Anyway, you went from 0 to 0. Yeah, but you know, I think on New Zealand CAD, definitely on the weekly chart, or maybe not, but monthly chart. No, this is not the New Zealand CAD. I think it's the pound CAD. Guys, let me check again. Yeah, it's the pound CAD. Oh, okay, yeah, it's the month. I think on pound CAD, this might be, you know, this might be, you know, the good spot in pound CAD. The pound already depreciate a lot. And last week we had a news. Boris Johnson left the government. We don't know if it's a good news, bad news. There is a lot of economical issue in UK. But again, I think it's still a good news for the pound. So maybe with this small interesting news, the market can push up a little bit in pound. Okay, we can have an appreciation in the pound currency. Okay, let's check the opening in the market. I think the market's starting to go down in the indices. Yeah, see, this spot is still a tough spot to pass. But again, what's it interesting? It's we create, you know, a better environment. Okay, we actually in a uptrend in the US indices. Still there is this huge zone that we are still struggling to pass. You know, we still have to give the market some time and hope the market can, you know, make a high in a shorter time frame. Still in the daily chart, the next spot, I think if we break this zone, the next spot is around 4,170. Okay, especially here. But before that, we should break this resistance. Okay, finally we see some. Yeah, the S&P opened down. Indices opening down. and we got the gold starting to push up. Okay, this was something I looked for already a few weeks ago. Okay, when the market is going down, especially stocks market, we should have metal commodities pushing up. Okay, risk on, risk off environment. We discussed it a few times already about it. And yes, getting to my trail, definitely we are already approaching the middle of the zone, so I would remove my stop loss to break even, start something. Yeah, I'm waiting especially the middle of the zone to close at least 30% of my position. So I think I would sell one lot at the middle to take some TP. But again, the selling zone is at the top, so I have my TP set. I think I will close the trading room in the next 2 minutes, and then I will manage the trades. But yes, actually the trade is already locked. You know, after the bounce, the stop loss is already moved to break even. And yes, maybe I should close. Okay, the market is already pushing, even with any no modify market execution. Yeah, I would close one. Why not? Okay, so I already took one lot at the middle, so 2 lots left in gold. I like especially this type of zone in the market. I think this is one of my favorite setup I have. When you identify a zone, a key zone, and you know the risk reward is so in your favor. Okay, the stop loss is very tight. Okay, because you have here the line is quite straight, horizontal. So yes, I like those type of market. Okay, guys, this was a very tough and not tough, but very interesting sessions. I tried to talk and discuss about macro environment, geopolitical aspect, according commodity. Try to change a little bit the subject. You know, there is a lot of traders and streamers that all the time and all day making technical analysis and where I should put my stop loss. I try to be a bit different on that aspect. Maybe it's quite advanced talks and discussion, but still in this type of market it's very, very important to understand all the there will be an economic numbers or economic setup that will impact the market, and that's as a trader how I see and how I can analyze and take some trades in the market. So I hope you appreciate. Again, I will still show you some trades I have in the market. I will still show you how I manage the trades, but yeah, I want to put a flag on talking and discussing about articles that we see and analysts from big banks, what they see in the market as well. So yeah, this was a very interesting session, guys. So thank you for people that stayed with me until the end. Okay, I already see Lucian staying all the way, Paul as well. So yeah, thank you very much, guys. Thank John. See you tomorrow for another trading room. Saul will be with you. Generally, Saul like trading, and I hope he will show you how to make some good pips in the market as usual, guys. And we're gonna see each other in Wednesday for the next trading room. Thank you, guys. Have a nice week. Bye bye.